At a recent joint TCS and B3i event, we asked panelists what is the relevance and significance of introducing legally bound contracts on distributed ledger.
Well, with blockchain or without blockchain, when you're looking at contracts and then those contracts being translated into code so that they can become automated contracts, as in smart contracts in the blockchain, or just automated contracts in a policy admin platform or in other places, right? The key part is really what infrastructure is generating that translation, and if that translation is consistent and unique and incorruptible. So one of the things distributed ledger technologies enable us to do is really to have a mapping of that legal contract that starts being, just a contract on paper or a contract that is digital, but it is based on our language and language structures, into a unique way of translating that into code. So I think one of the great things about blockchain and the way contracts were discussed in the context of blockchain and how a legal contract became a smart contract on a ledger was the discussion about that consistency, which is not straightforward. Computable contracting is actually an area that is being investigated by the industry right now, and it is not as straightforward as it may sound, right? So to me, there's like two pieces of this. One is that translation that becomes seamless, it becomes unique, that becomes consistent, and therefore I know that whenever I am speaking, in a certain language and generating a clause in a contract, that will translate into a code that is unique and consistent and incorruptible and on ledger, so that people can actually agree on that. And there is no divorce or a separation between what the legal contract is and what the commitment was at the beginning when it was in human language and it was translated into code. So that's one thing. But on the other hand, one of the things that these ledgers allow us to do is just to say, well, once it is there and you have been using that translation and multiple parties agreed on it on chain, it is a legally binding contract that is, you don't have to go and check if the contract exists or does not exist and if we agreed on each one of that, because the way the contract is generated is it's synchronized. And that actually generates a lot of the efficiencies Bob was talking about, because sadly, a great part of what we do, at least on the commercial side of insurance, our process is about making sure that we all agree on what the contract is and what the commitment is and how that translation worked, right? And if we all translated the risk and the data in the right way, and if we agree, and that generates a lot of back and forth. It was very romantic in launch times because we were running around with stuff, and I can relate to the romantic part of what the process looked like. But today we can actually code that process, and that itself is revolutionary. It may not seem very sexy, right? Because at the end of the day, we shouldn't be seeing technology. Technology just enables things to work better. But it is groundbreaking in an industry like ours, where making sure that we agree on what the contract is took a lot of time, took a lot of effort, and took a lot of very smart talent that could be doing other things.